Welcome back, traders. This is our looking at the charts report for the 6th of May. Today we'll be looking at four currency pairs. First is EURUSD, second is GBPUSD, then is AUDUSD, and finally is NZDUSD. Starting first with EURUSD, this is the 4-hour chart. Now, the currency pair constantly tested our S1 119.95 in the last sessions, yet the level strength was proven as it did not fold under the pressure of the bears. Other support levels we have in mind in case the market decides to move lower is the S2 119.45 hurdle that was tested on the 19th of April for the last time, and even lower the S3 118.84 line that was tested many times as both a resistance and support level from the 6th to the 13th of April. However, with the latest move upward, traders could also be looking at higher levels. First, in our opinion, the R1 120.70 resistance level could be a choice as it was briefly tested on the 3rd of May. Higher than that, the R2 121.05 barrier could also become a target, while the R3 121.55 level represents the highest price reached by the currency pair since late February. The RSI indicator below our chart is rebounding from lower levels, currently running just above 50. The euro could receive support as today, the 6th of May, the block's retail sales for March jumped dynamically in positive territory from previous negative. Traders should keep in mind the German and French industrial output data for March to be released on the 7th of May, as they could create volatility for the euro. Moving now to GBPUSD for our chart. Cable was on a high in the past daily sessions, moving from a drop to the S1 138.50 support level upwards to the R1 139.30 resistance level. As the price action is still between these lines, at the moment we tend to be mindful of their validity as levels. They could also be used as barometers for an upward or downward breakout accordingly. Now, to the upside, we have taken note of two other levels. First is the R2 139.65 resistance level that was reached in the last days of April, and higher the R3 140.05 line, which was tested various times in the past months but was not breached, proving it is a considerable top for the currency pair traders. Downwards, in case the sellers dominate, then the price action can be moved nearby the S1 138.50 support level and even lower to the S2 138 support hurdle that was tested on the 3rd of May. Yet the lowest level for this chart is the S3 137.55 support hurdle. Some volatility is expected to arise on BOE's interest rate decision today, Thursday, while a positive view on the UK economy seems to be in place as Britain's relatively successful COVID-19 vaccine rollout has allowed the economy to recover faster and business activity is on the rise. Moving now to AUDUSD for our chart. The Aussie has been moving in a sideways motion between our R1 0.7755 resistance level and our S1 0.7705 support level for most of the past days. The R1 0.7755 has been tested but not breached, while the S1 0.7705 level has been breached, and the price activity fell to our S2 0.7683 level that was briefly tested. Our next level lower could be the S3 0.7655 hurdle that was used as a resistance back in April. In the scenario of a buying trend, the R1 could be breached, making way for the R2 0.7775 resistance level to come into play. A significant level for the bulls is the R3 0.7805 line, which was tested in April, but the market did not move above it. This is a rather tough challenge for the bulls, yet a clear breach could boost the currency pair outside the currency price range it's in. The range has been between the S2 0.7683 support level and the R3 0.7805 line in the past months. Traders should note that on the 10th of May we get the Australian retail sales for March and the retail trade figure for Q1. Caution is advised as they are rather important figures for the economy. Our final chart is the NZDUSD for our chart. In the most recent sessions, NZDUSD was undertaken by a strong buying interest which sent the currency pair to the R1 0.7230 resistance level. Despite the upward momentum, the market did not have the power to test our R2 0.7255 line, or higher the R3 0.7280 resistance hurdle that were previously tested in April as monthly highs. On the contrary, from a selling perspective, the S1 0.7180 support level could be the predominant first stop for the bears. Lower the S2 0.7150 support level could be another choice for the sellers, as it was tested various times in April and was breached twice when the price action tested the S3 0.7125 support level. NZD traders should keep in mind the New Zealand Reserve Assets figure for April to be released on the 7th of May. Also note the Australian data pre-mentioned can also move NZD, as they are both commodity currencies and are related. As a final note, traders should keep an eye out for the US employment report to be released on the 7th of May, Friday, in the early US session. This event can produce strong market reaction, and caution is advised as volatility on all the pre-mentioned currency pairs could increase. That's the end of this report. We hope you enjoyed it as well as found it useful. If you liked this video, please feel free to share and subscribe. We appreciate your time very much. From everyone here at IronFX, wishes for solid trading.